Hi everyone, this is Krista, and here I am in my car because I really wanted to finish this video, and since I live in a 1,200 square foot house with 2 other people and 3 other dogs and chickens in the backyard, it's really hard to do videos there without any distractions unless I have a big block of time, which I don't today. So I will be doing my video in my car, and here I am in the grocery outlet parking lot. It's a very peaceful parking lot. Apparently there's other people that like to spend their lunch breaks in their cars, because I see a couple other people on either side of me that are also sitting in their cars, and I enjoy this as well because I can read here and just have some nice solitary time away from the office. And today I'm concentrating on my videos. So we'll see if this becomes a regular thing. I know in the summer it gets really hot in this parking lot. I live in Sacramento and I don't have a garage to park in, so the car does get a little hot. So you may see me with a radiant glow around me if I decide to do this in the summer, but in this case, I'm just doing it. It's March. It's a little warm. It is a warm day, so I might have a little bit of a glow. So in my last video, which I will link in the show notes below, I discussed an article by Sam Rowe of Yahoo Finance entitled "Something Dangerous is Happening Beneath the Surface of the Market Sell-Off." The article discussed the recent virus scare and how it has resulted in a drop of all asset classes in the market. I also climbed on the Yahoo Finance page a couple of days after that article was released to review the market indices of several asset classes. So I will put a card above for part 1, and then I will also link the link for the video in the show notes below so you can review it if you're interested. So this is part 2, and I'll be reviewing the article "Warren Buffett warns the coronavirus will affect business, but he certainly won't be selling stocks." This article is also by Sam Rowe of Yahoo Finance, and it actually came out on February 24th, which was 3 days before the article I reviewed in my last video. Apparently, according to a couple other YouTubers that I follow, saying the word coronavirus is a little taboo because it causes the YouTube algorithm to go into spasms and instantly demonetize your channel. However, since my channel is not monetized in the first place, it's not that important. All I wanted to do is share this information if you are interested. So here it is, and here I'm going to say it: coronavirus. And since the title of the article I will be reviewing today actually has the word coronavirus in it, removing it from this discussion doesn't make a whole lot of sense. We'll take a look at this article on the computer, and then I'll add my final comments on both articles.
Here's the second Yahoo Finance article entitled "Warren Buffett warns the coronavirus will affect business, but he certainly won't be selling stocks." Interestingly enough, it is now March 4th, 5 days after the first article I reviewed in part 1 of this video was released. And look at the indices now. It's 5:18 in the morning now, so we are looking at the futures. The S&P 500 is up, Dow is up, NASDAQ is up, Russell 2000 is down, crude oil is up, gold had a slight decrease, now it's slightly up, silver, again, slight decrease, now up, 10-year bond is neutral, volatility index is up, Bitcoin is down, after a slight increase, and cryptocurrency is down. So looking at the markets today, which the following week after that big plunge in the market that we had where all of the indices were down, apparently the stocks are going all over the place. And interestingly enough, Monday, which was the first day the stock markets opened after the big crash, the Dow was up 1,200 points. So we are looking at big volatility. We don't really know where the market's going. It appears that we're not in a crash. So this week, it appears that the astute stock buyers have seized the drop in the market as a buying opportunity. And this seems pretty reflective of stocks these days, since the internet has increased the transparency and information available about the stock market. The annoying thing about Yahoo Finance is that it's difficult to print these articles out in a readable format. They don't seem to have any print article link. I basically have to print what we see on the screen, which includes all the ads and the overlays of the ticker symbols on the right here. So I'm going to just read part of the article. I'm not going to read the whole thing, but just the parts which lend context to this discussion. Warren Buffett, chairman and CEO of Berkshire Hathaway, says a stock market rout, and I had to look up this word because I wasn't sure what it meant. I put the definition down here. We're witnessing today is good for us. We're a net buyer of stocks over time, he said on CNBC. Most people are savers. They should want the market to go down. They should want to buy at a lower price. Buffett's comments came as Dow futures were down by about 800 points or 3%. So keep in mind, this was last week, folks. This is not this week. This week, like I said, the market is going all over the place. Stocks around the world plunged on Monday, that's Monday of last week, as the coronavirus outbreak escalated, exacerbating fears that the global economy would seize up. Regarding the coronavirus specifically, Buffett made clear that he's not a specialist, and he warned that a very significant percentage of our businesses, one way, are affected. However, he reiterated that investors should be more focused on the long term, not the short term. And at the end of the last video that I put out, I had said this exact same thing. If you're buying a business, and that's what stocks are, you're going to own it for 10 or 20 years, he said. The real question is, has the 10 or 20-year outlook for American businesses changed in the last 24 or 48 hours? Buffett noted that many of the stocks in Berkshire Hathaway's portfolio have been in there for decades. So I'm going to skip over this next section here because I don't think it was too relevant to the context of everything. It's just a little bit of an add-on. But here's the important part, guys. Sell-offs are buying opportunities. Later in his CNBC appearance, Buffett noted that 3% market sell-offs, like what we're seeing today, are almost countless in history, and they ultimately turned out to be opportunities. I can't think of one 3% sell-off you shouldn't have bought on, he said. How can it be bad news unless you have to sell? We certainly won't be selling. So this is the moral of the story, what Warren Buffett says. Just keep your eyes peeled And when the markets go down, start buying more equities because you're getting a deal. This clip here is not too relevant to this discussion, but I will link the article below in case you want to review the video that goes with it. It mainly talks about Berkshire Hathaway's performance last year and Buffett's recommendations to buy stocks. I did want to play this part of the video though.
In his letter, the 89-year-old CEO also sought to assuage shareholders who were worried about who would succeed him and his 96-year-old vice chairman, Charlie Munger. He said the company, in his words, is 100% prepared for a departure.
He's 89 years old. Look how spry he is. That's amazing. And he's sharp as a tack, too. And he's so involved in running his company. I hope I am that amazing by the time I'm 89, if I even last that long.
That completes part 2 of this whole discussion on the market sell-off, or at this point, the market volatility. Because since these 2 articles were released last week, the Dow has jumped up and down and all over the place. So who knows where it's going to be tomorrow. The moral of the story is that if we subscribe to a conservative value investing philosophy, like Mr. Buffett says, and like I said in my last video, and we don't react to these market fluctuations by selling off all our investments, in the long run, we will most likely be ahead of the game. And in the near future, if we can keep aware of which stocks or businesses, because that's essentially what stocks are, businesses that are great values, have great fundamentals, like steady earnings, large moats, low debt, and great management, we can snatch up some great bargains during the market downturns. And we'll be sitting pretty in the long run when we are ready to draw down our investments. So that's it for today, and that is the whole wrap-up of these 2 articles by Sam Rowe. The first one, entitled "Something Dangerous is Happening Beneath the Surface of the Market Sell-Off," and the second one, which is "Warren Buffett warns the coronavirus will affect business, but he certainly won't be selling stocks." So that's it for today. Thanks for watching. If you like this video, please hit the like button and feel free to subscribe to the channel. And always stay inspired, and we'll see you in the next video.